In 2021, a father in Scottsdale, Arizona lent his daughter $150,000 to buy a house. No interest, just a handshake and a promise to pay it back whenever. 18 months later, the IRS sent both of them letters. Not because the loan was illegal, because giving money away for free is a taxable event the moment it crosses a specific dollar line, and almost nobody outside a tax attorney's office knows the rule exists. The letters cited a section of the tax code most homeowners have never heard of, one that treats a free loan between relatives as if interest changed hands even when it never did. The IRS calls it the family loan rule, and it works like this. If you lend a relative money and charge zero interest, or less than the rate the IRS sets each month, the government treats the interest you didn't charge as if you handed it to them in cash. That phantom interest gets added to your income for tax purposes, and if it's big enough, it also counts against your $19,000 per person annual gift limit. Here's the part that catches families off guard. It doesn't matter that no money physically moved. The father in Scottsdale never touched a dime of interest. He never asked for it, but the IRS calculated what he could have charged, called that number imputed interest, and taxed him on income he never actually received. Multiply that phantom rate by a $150,000 loan, and the number isn't small. It can run into thousands of dollars of income the IRS says he earned but never touched. We post a new one of these every single day, so if this is the first time you've heard the words imputed interest, subscribe now so you don't walk into the next hidden rule blind. Because the family loan rule doesn't just hit parents lending for a house. It hits siblings splitting an inheritance, grandparents helping with tuition, even friends who write up a $30,000 loan on a napkin. The workaround is almost too simple, and that's exactly why nobody explains it. Charge at least the IRS's minimum rate, published monthly, currently sitting around 4% for short-term loans, and the whole problem disappears. Write it down, even a one-page agreement, and the IRS treats it like any bank loan instead of a gift in disguise. Drop a comment if your family has ever lent or borrowed money without paperwork. You're not alone, and it's an easy fix once you know the rule. The Scottsdale family eventually cleared it up by drafting a loan agreement after the fact and paying a modest penalty, but plenty of families never catch the letter until years of interest has piled up. Millions of families hand money to relatives every year without ever hearing the word imputed. One signature is the difference between a gift and a gift tax bill. Hit the bell so tomorrow's hidden rule doesn't slip past you too.